everyone, welcome back to the market update featuring by Rationale and MarketsAll. In today's episode, we'll dive into last week's economic calendar, the data flow and its market impact. We're gonna take a look to the central bank's upcoming monetary policy decisions, explore the latest developments in the crypto space, and we'll try to analyze the overall market sentiment. And yeah, let's get started. On this slide, I think it will come now. Yes, on this slide you'll see the economic calendar and the key data points that we received over the past week. I'll quickly walk through last week's data flow and give you try to give you a clear picture of where the market currently stands and what's shaping the sentiment right now. First of all, non-farm payroll data that we received. Let's break down what's happening with the latest jobs report and what it could mean for the Fed's upcoming decision. First of all, in November, the US added 227,000 jobs. It's pretty much in line with the expectation. This is like a solid recovery after October. It was around like a 12K at the beginning. Like a near zero growth, which was thrown off by strikes and hurricanes. That's why that number was that low. Even with there's just like slight revision to that 12K number. It got revised to 36K for the October. It was still one of the weakest months since the pandemic. So let's check where's the growth coming from, this 227K growth. What's the source? Like sectors like leisure, hospitality, healthcare, and education really drove the gains, along with bounce back in construction and manufacturing after October's disruptions. But when you look at the big picture, the average job growth over the past 3 months, that trailing 3 months is another indicator in the job data, and it's important. And it's now around 173K levels compared to 200K levels that we see over the year. It's a bit low. So in the big picture, you can sense some a problem. Unemployment also ticked up to 4.2%. Now some might worry about but economists are saying that these levels are pretty normal. Here's where it gets interesting. Investors keeping a close eye on all of this, because it feeds into Fed's next move, right? That gives signs. So November also saw a slower growth in services activity. If you check the ISM service number that we received also last week, you can see here, yeah, as you can see, the forecast was 56.4, but 55.5, but the actual number 52.1. So service side, that you can see there's some weakness at that side. So we can say that in general, after the NFP number, or a labor related number that we received last week, a labor market that's cooling but not collapsing. So it's still balanced, and Fed, we know that Fed's watching data closely, and this week's going to be interesting in terms of we're going to receive US CPI number. That will be crucial on their decision. But definitely after the NFP number, we can say that the soft landing scenario is the base scenario, and after the data, the next rate cuts probability increased to 85% after 70%, as far as I remember, just after the data. So also there was a Powell speech last. Let's break down what Fed Chair Powell shared last week. Here, the US economy, he says that still strong, but Powell said the economy in better shape than expected. And back in September, when the Fed started cutting rates. Back then, the unemployment had ticked up, payroll growth was slowing, and there were worries about inflation being too low. That was the stance at that time. But since then, the data has shown that the economy is actually stronger and growth is up. The labor market looks solid. I mean, this apart from that October number because of the hurricane and strikes and stuff. And the inflation is running a bit higher than the expected, that I can say. Here's the takeaway. Powell hinted that the Fed might slow down its pace of rate cuts due to this potential hints that we see in the labor market data, for example, that trailing 3-month data. But the good news is, he said that he just exactly his sentence was, the good news is we can afford to be a little more cautious as we try to find neutral rate of neutral rates, federal fund rate. So looking ahead, this week November inflation report is set to drop, and it's like a big one for the markets. Despite the rising odds of Fed rate cut, additional easing isn't a done deal just yet. According to Minneapolis President Neil Kashkari, additional easing is not done yet. The Wednesday CPI data will be crucial if inflation surprises to the upside, especially in sticky service prices. You know, there are like some inflation indicators that Fed also tracks, and sticky inflation is one of the most important from them. And it's I mean, because it's sticky inflation means like that the part of the inflation that couldn't be managed yet with the rate hikes that we had before, because you know some of components of inflation we expect to see some lagged impact of those rate hikes, and if we don't see those lagged impact of those rate hikes, it's problematic, and the sticky inflation is there in that scenario. So all eyes are on that CPI print, as it could make or break the Fed's next move. Yeah, also in the upcoming week and the following one, nearly like all like central banks will be meeting to discuss and announce their monetary policy decisions. Let's quickly take a closer look at what to expect from them. First of all, Fed on December 18, rate cut is expected, and traders are not fully pricing in like a quarter point rate cut yet. There's uncertainty about Fed's next move. CPI number will be crucial, as I mentioned. Then Bank of Japan on December 19, rate hike is expected from them, but market's still uncertain if the Bank of Japan will hike its benchmark rate. It's not certain yet. We'll see. Bank of Canada, there's a growing confidence that Bank of Canada will make a jumbo half rate cut on this Wednesday, December 6th. SMB, Swiss National Bank, on December 7th. The likelihood of a half-point rate cut is highly uncertain. The swap market pricing indicating it's on like a knife edge. It's really uncertain at that top part. ECB December 7. First of all, a quarter point reduction is expected. That's like a fully priced. Some speculation that a larger rate cut could be made in the coming months. Also, maybe surprise rates like a 50 basis point rate cut might come this week as well, signaling a rising concern on about like a growth. Like I think last week Germany's industrial production surprised with a contraction in October. Definitely not good news. There was a relief rally in French assets last week on Marine Le Pen expressing that this like a budget issues. They expressed their optimism on the budget issues that they will be solved. With that optimism, there was a relief on stock indices, euro indices, and yeah, like, but that's Eurozone seems more problematic than other places, and that problems bring some expectation on more like a rate cuts, and the risk factors of the Eurozone that I see, like just beyond the economics, can be like a summarized in 3 points. First of all, US policies, because nobody knows the order of Republican agenda will be implemented in the upcoming in January. You know, first, I mean, tariffs gonna come first, or I don't know, like this some China issues or war policies. Nobody knows that, and you know that order will have impact on different pricings. First of all, US policies brings uncertainty on Eurozone. Tariffs or deregulation could introduce further uncertainty. Second risk is ongoing Ukraine war. The conflict continues to impact the region. Higher energy prices, higher inflation, that's another part, or impact on economic activity in a bad way. So, and the third one that I see is like a geopolitical tensions. These ongoing tensions are also putting pressure on sentiment. Then another central bank, Reserve Bank of Australia, they on December 5th, they're expected to keep rates on hold with no change expected. And December 6th, Brazilian central bank, they expected to raise borrowing cost to to fight inflation pressures, particularly as the Brazilian real has been impacted by President Trump's tariff threats on BRICS nations. So yeah, before getting into into breakdown of two key developments in the crypto space, I want to dive in first into the big picture. Like, let's take a look at Bitcoin's 1 hour chart. I mean, when I say big picture, then coming into 1 hour chart, it's contradicting, but yeah. What I'm trying to say is, here I just wanted to emphasize the short-term volatility here. As you can see, like here, like a huge price dump in the hourly chart. So also, I think it was also yesterday, we saw a huge volatility. I've included this chart just as a reminder to stay focused on bigger picture and avoid making impulsive decisions. The marked areas here in the chart show where sharp price movements led to liquidation of many accounts. To avoid being part of that crowd, it's crucial to stick to your main strategy and avoid reacting emotionally to short-term market fluctuations. That's why I put this short-term 1 hour chart here. So let's jump to what are the two key developments in crypto space. First of all, in the bigger picture, Trump administration crypto push. Donald Trump has selected Paul Atkins last week to lead the SEC. He's known as a crypto supporter. This appointment is like a sparking optimism that the US could move toward more crypto-friendly regulatory environment, potentially easing regulation. This is under the deregulation headline of Republican agenda, which could be a significant boost for crypto investors. Second one is Fed Chair Powell's comments on Bitcoin. I mean, it is seen that between Powell and Trump, everything's fine for now. At the New York Times Dealbook Summit, Fed Chair Powell stated that Bitcoin is more of competitor to gold than the US dollar. This statement assuring investors that Fed doesn't view Bitcoin as a threat to dollar, suggesting that monetary policy leaders might be more open to considering Bitcoin as a legitimate asset. This is also positive. This could pave the way for broader acceptance of crypto in the financial system. While there's optimism in crypto space, I mean, by the way, along the way of this crypto optimism, definitely we will see some moments like, for example, yesterday's sell-off and stuff. These are that Trump's election wave might rest at some points. And it's, by the way, if you want to see a healthy increase in price, you would like to see some profit-taking activity along the way. And it's better to have a plan, just maybe I mean, if you believe that it's more like a long-term investment, having a wide stop loss, following the trend with a ATR, for example, it might be a good strategy. While speaking of this crypto optimism, I'd like to touch a broader optimism tied to American exceptionalism reflecting in the outperformance of US equities compared to its global peers. With Trump administration in charge, Republican agenda present two key market scenarios. First of all, growth-focused policies could boost US economy without significantly harming, impacting or like a global markets. That's the first scenario. Second, this escalating trade wars, like those high tariffs and stuff, could heighten like global growth risk, like huge impact on China or something, adding some uncertainty and lack of clarity on the order in, like that's another problem. And also like the order of Republican agenda is adding another uncertainty on the current sentiment. One major concern here is potential return of inflation. As you might remember, just after Trump got elected, you saw that US 10-year yields came down from came up from 3.5% to 4.5% with that expectation that inflation is coming back, expectation. This could push Fed to raise interest rates further, creating widespread uncertainty as markets attempt to predict how high rates might go. Such a scenario wouldn't just impact the US, for sure. The global markets would suffer. But for example, if you check emerging markets ETF indices and indices ETF and stuff, when you see like a downward movement in US yields, you see that the emerging markets ETF generally reacting positively. That's why like a potential high inflation would impact in a bad way the emerging markets as well. So what I can say is that like a good news, like definitely we can say that from their speech and stuff, policymakers, central bankers are aware of this situation. That's why, for example, we might see a 25 basis point rate cut maybe December, but we might see that maybe the pace of rate cuts might come down a bit. Also in January, with Trump's coming into the charge, as I said, like there will be some uncertainty, maybe just to compensate, just to like balance that uncertainty plus potential inflation impact. This, by the way, the upcoming inflation report will be crucial on this decision for sure. We might see that more cautious way might be implied. So yeah, let's switch to some charts that I would like to show this week. Here, first of all, I would like to start with oil chart. First of all, if you follow like the previous videos of market update, you saw that that's the way I follow oil chart in a weekly time frame. Oil prices are under pressure due to oversupply, despite OPEC Plus delaying production cuts. OPEC Plus has decided to delay its plans to bring additional barrels of crude oil to the market, just to just to balance the prices. Initially, like these increases were scheduled to begin last October, but it was pushed to January. Now the timeline has been extended even further, with production ramp ups postponed until April. The delay comes as weaker oil prices and abundant supply weigh on the market. To stabilize conditions, OPEC Plus has also announced an extension of its production cuts by additional 12 months, pushing them all the way to the end of 2026. Also, Trump's mentality on increasing oil production would not help the price. So in general, supply conditions suggest lower oil prices. I believe in this way. And also this weekly charts supports this idea. I think like after this breakdown, a pullback, this red line is 40-week moving average. We saw the rejection from there. Yeah, if you had stopped here, you would stopped out. This was a bit tricky trade on the short end, but yeah, general I think downtrend is still intact on the oil side. And here you see gold chart. First of all, Chinese central bank bought gold Also like with, you know, that, I mean, here, let me come to the daily chart first of all. You know, in the weekly one, you know, just as a reminder, we were here after this huge move. Let's zoom into daily chart. With the rates, I mean, after Trump got elected, we saw this movement around like a 10% correction. Then the price is stabilizing around short-term moving averages of 50 and 21-day moving averages. And here you see a squeeze and just a move after here. I mean, I believe that this Trump hype should rest a bit. That's why, like, also we saw like a bad pricing in cryptos. At least they're like resting a bit currently, while, I mean, at least while I'm recording this video. And here, this uncertainty brings like, and this uncertainty push people to go some like a safe haven also. And with the rates coming a bit down, there's a room for gold, and I think this is the reason of this movement. I still believe, I mean, when this price is coming from here to here, I was saying again, like any kind of price correction, still buy gold opportunity for me. I still believe in the bigger picture because I don't see any reason, because rates are coming down, uncertainty is there. I mean, in that scenario, what are you gonna, at least you need to have some portion of gold in your portfolio. I think that's a must. That's a must situation. In dollar index weekly chart, that's how I'm following this rectangle chart pattern. Remember that technically this is like a both directional chart pattern. It might go like both ways, but currently it's more close to the upside as it is above 10-week and 40-week moving averages. I'm watching this like 107-ish levels closely. If we see a breakout, that might go that way. But yeah, in general, with rates coming down, I mean, this inflation report will be decisive on the direction of this chart. Euro USD naturally, it's similar to the DXY on that way, with the expectation of ECB being faster than Fed in cutting rates. We might expect bearish movements in this parity. That's why a potential short position might be taken with a stop loss around here in the weekly chart. That might work well, but especially if the inflation comes higher than expected, we might see some action in this chart. Here another chart. First of all, Canadian dollar, Japanese yen. Here, as you can see, like kind of, let's say, head and shoulder top formation is being formed, let's say. But Bank of Japan is like, I mean, it's expected that Bank of Japan will hike in the next meeting, but this uncertainty caused this, you know, by the way, that hike expectation caused this move already. But currently there is some uncertainty. That's why we see this like some rejection around here. But I think the main trend in Japanese yen denominated currencies is downway. I mean, I expect Japanese yen to appreciate because of the policy divergence. And yeah, and as you can see, technically, considering Canadian Bank of Canada might do like a 50 basis point rate cut this week, plus if we expect rate hike from Japanese Bank of Japan, there's a policy divergence, and that offers a short trade idea in Canada Japanese yen currency exchange rate. And also, when you come to the technical side, if you see this head and shoulder top formation in the weekly, I think that's a really good game plan. A potential breakdown, or I don't know, you can just maybe short it from here with, because the macro side is supporting, with a stop here by taking without waiting the breakdown. That might also another short game plan. And Aussie US dollar, technically I see a symmetrical triangle chart pattern in the weekly, and when you come to the monthly chart, this like a trend line, this lower boundary of the symmetrical triangle chart pattern, if you take this line like this, as you can see in the monthly chart, it seems a pretty crucial trend line, and it would be like pretty normal to see some rejection from here. But as I mentioned, US inflation report will be crucial. We'll be watching closely. I think like the best trade idea that I see for this week is definitely Canadian Japanese yen, as there's a policy obvious policy divergence. And yeah, this week that's all I'm gonna talk about. Thank you for your time, if you had managed to come up until this minute. If you like whatever you see here, please subscribe to our channel and thumbs up, please. And you can also find the MarketsAll link to become a member, or Rationale link just down below the video. Just Rationale to receive equities and all kind of instruments, trade ideas, reports. Yeah, thank you for your time. I hope you have a great week. Bye.